Good morning. It's Tuesday. Let's see if you can hear me okay. Give me a thumbs up if you can. Good morning. It's Tuesday, the 1st of November. Welcome to Talking Bull. Happy birthday, Chloe. You know who you are. And looking forward to seeing you later. It's been quite a muted session yesterday, really. We're going to dive into the news headlines first, and then we're going to crack on and see the technicals that we're looking at the moment. Let's first of all take a look at those news headlines and give you a little bit more detail on them. The headline Eurozone consumer inflation rate increased sharply to 10.7% for October from 9.9% the previous month, which was well above consensus of 10.2% and a fresh record high for the series. The underlying rate also increased to 5% from 4.8%, which is above market expectations of 4.8% and also a record high. Chicago PMI manufacturing index remained in contraction for October with a small decline to 45.2 from 45.7 the previous month and below consensus forecast of 47, maintaining the run of generally weak manufacturing releases. US Treasuries recovered from intraday lows following the US data releases with a 10-year yield around 4.02% from highs around 4.08%, so a small drop off there towards the close. Japanese Finance Minister Suzuki says that stealth yen intervention should be aimed at maximizing effects, and that excessive currency moves by speculative trading cannot be tolerated. He added that a further sharp yen weakening is unfavorable. The ministry also added that the intervention totals over $42 billion for October. There was increased speculation over a potential pivot away from the very loose monetary policy, and the yen posted significant net gains in Asia. The RBA, Reserve Bank of Australia, increased interest rates by 25 basis points to 2.85% as expected. The bank raised its inflation forecast and cut the growth outlook while resisting a more aggressive stance in raising rates. The RBA rate decision added fresh fuel to speculation that global central banks were shifting towards a slower pace of policy tightening, with interest rates already above neutral rates. This speculation helped underpin global risk appetite and equities recovering ground during the Asian session. So that is what we saw. Let's take a look at the charts and where we're going to start. Let's start, I think I've got it up there. I'm going to start with Bitcoin. Let me just double check that everyone's hearing me okay. Let me know if there's any problems. Yeah, all looks good there. So yeah, let's dive into Bitcoin. And yesterday's price action was a little bit more muted. Well, Sunday and Monday's price action has pulled away from the highs we saw. We got up to 21, just above the 21,000 level on Saturday. Sunday pulled back, and Monday even we got back down to a little bit of previous resistance, now support at 20,260. Trading in the middle at the moment, so not really a lot going on there on the crypto. Levels to watch, really looking for that break above the 21,000 level. A breakdown below 20,000 would be negative and further downside should result. Taking a look at gold, we saw further sell-off yesterday in gold. I think I was looking for that. We've still got this support potential for a double bottom if we manage to get up above the 1735, but that's a long way off yet. We're still in this bearish channel. Let's take a look at it. Plenty of resistance up here between the 1670 level and the 1690 level. So that's there to watch. The downward trending channel will also add further negativity to that resistance area. However, this morning's price action has been a lot better. We've seen we're basically posting a bullish outside day currently. If we were to close here, still plenty of time to mix up the gold price during the day. Really, that's going to be all based on dollar strength weakness. Where that goes, that's really been driven by that at the moment. But a pretty positive start, pretty nice start on a Tuesday morning for gold, looking pretty positive. Really needs to sort of maintain price action now above the 1630 level, otherwise it opens up a potential move to 1615. On the Brent crude oil, we saw further downsides yesterday, so a nice little topping formation here. Let's take a look at that. Almost like an evening doji star, but we've got two dojis in the middle. So a little bit more complex of a formation, but still gives the same feedback from price action. So really saw a nice sell-off down towards this upward trending support line, drew that in yesterday, and it stalled in front of there. The trend line actually came in at 84.25. We got down to 84.78. That was the low before the overnight price action has really turned around nicely. So we could, this is leading me towards a dollar index chart, which could see some dollar weakness without even looking. So yeah, that's looking positive. Really needs to climb above that $89.50 level to open up the upside. But again, today's support coming in around about yesterday's, just below yesterday's low in WTI crude oil at 84.70. So watch out for that one as well. Let's take a look at dollar index. Yes, as suspected, dollar index has had a nice little turnaround overnight. We had three good drives higher over the last Thursday, Friday, and Monday price action into the end of the month. November the 1st has started off a little bit damp for the dollar, but obviously we've still got this really nice bullish trend line to support below. We've got plenty of support in the form of 110 level, and below that at 109.50, below that at 107.60. Really need to get back above, to get on track for this dollar, needs to get back above the 111.63 level to push higher. Looking at euro dollar, actually a little bit of a well, turnaround obviously in here. We got back down, broke down back into this bearish channel that we've got on the daily chart, broke back into it, but again has found support here. We can draw a nice little trend line now, which will be one to watch, not today, but in the future. That's coming in around about the 97 level at the moment, and further. Let's take a look at, actually, let's take a little look at the cloud. We're trading within the Ichimoku cloud, very interesting indeed, and it won't take much really to push above it. So first target would be a break of the top of the cloud coming in at 99.60. After that, really need to clear the high from last week, and that would be up at 1.0094. So round about the 101 level, we'll call it. They're the levels too that the euro dollar really will be targeting, and really needs to sort of stay above this today's trend line, as I say, down at well, 97.85 is the trend line, and we've got the cloud support as well, the bottom of the cloud support at 98.35. So they're the levels to watch in euro dollar. Cable, also slightly positive on the overnight price action after yesterday's sell-off. We managed to stall just around the previous swing high, which was resistance. That now turns into support, and the support came in yesterday, was quite solid around about that 114.58 level. So that for me is going to be really pivotal. The 114 level was a level highlighted if we go back all the way to March 20. That's the one for me that we really need to sort of like find as the, as you know, where the trend is going from here. Really 114, the figure for me is the key part in this. So at the moment it's looking like we're in this corrective channel. Sterling dollar cable has to really push well above the 117.35 level to stave off the negativity. Taking a little look at dollar yen also. Dollar yen on the back foot overnight. The morning doji star formation, which formed price action over the last 3 or 4 days, has been pretty decent. It's got up, found a resistance at previous highs, 148.95. So yeah, the talk of the dollar intervention there is still up front and one to watch. Aussie dollar, a strong move higher in the Aussie dollar. Obviously, that 25 basis point move yesterday, which was expected, and we're forming a bit of a morning doji star formation there as well. And you can see resistance really anywhere between the 65 and the 65.24 level. Support coming in at around about 63.70. Moving on to indices now. Let's take a look at what's going on in here. We've got a really nice strong push higher in the FTSE this morning. We're pushing up towards that 161.8% fib extension level, 72.12 that comes in at, and we've got cloud resistance here. So we're going to run into a little bit of headwind here, but the inverse head and shoulders formation playing out really nicely. The measured move target for that is 73.32. That's something we picked up a few weeks ago. Sorry, it was probably only last week or at the end of the week before. Same sort of price action in the DAX, the Germany 40. This push higher is becoming a little bit more exponential. So it's more like an ending wedge formation. Here we go. Let's draw that in there. Don't need to extend it higher. Something like that. So that's one to watch. This resistance will prove really key, all the way up to 13,550, starting around about current levels. We're above the daily Ichimoku cloud. Is this the Christmas rally starting early? I don't think so. I think we've got a lot more to sort of like to come from these indices markets as we move into November. On the downside of things, we've hit resistance at 32,940. That seems to be pretty solid over the last over Friday and Monday's price action. A little bit of a hanging man candle here, one to watch out for, but that can be negated by a push and a close higher. Looking really to target resistance all the way up at 33,426. I think even when we get to there, there's still a good call for selling into the rallies at the right level. Maybe wait for that sort of turnaround, that candle that sort of like gives you warning that we are really stalling at those levels. But at the moment, dip buying is the way forward. The Nasdaq, again, we've got an inverse head and shoulders formation here, playing out rather nicely, but it really needs to get above that 11,685. It's really struggling. So we've got a 127 Fibonacci extension level around there. We've got the previous highs from the 6th of October. We've got the highs from the 25th of October. Really needs to sort of like break above that resistance, the 38.2% fib retracement as well. I think it's going to be tough for the Nasdaq to sort of like improve on this, and then you've got that's even before the Ichimoku cloud comes into the equation. Support coming in 11,335 and resistance all the way up. S&P, a little bit similar to Dow, it's sort of like seems to be capped at the moment, 39.12, and we've got this Ichimoku cloud coming in, 161.8% fib extension, 3960, and the double bottom measured move all the way up at just above 4,000, 4,050. So potential for, it feels like potential for Dow and S&P to push a little bit higher, but the Nasdaq I think will face that tough headwind. And let's take a look at Aussie 200. Reacted really nicely from that quarter point base rate rise yesterday, but we have got resistance just above at the 7,000 level, so look out for that. Yeah, so far so good for the Aussie 200. Great, so let's dive into the part of the show where we do a gun-to-head challenge. Each participant picks a trade live on air, and I have to put a stop and a target in. I'll post it on the channel for you all to see on the TradingView channel. We'll place the order at market, have a stop and a target, at least a 2-to-1 risk-reward ratio. That's what we're looking for. And wherever it is at 9 o'clock, that's where we'll market to market. We'll close it off there. So if I buy gold, it rallies and it's on side at 9 o'clock, then that'll post as a win. Let's take a look at what we did yesterday. Go to the signal center profile, leave the chart behind. I'll get back into the chart in a second. I was looking for a euro dollar breakdown. So this is what we saw. We saw a nice move to the downside. Actually looks like I was stopped out. Oh, that's not good. I wasn't expecting that. Yeah, looks like I was stopped out on that. Really unlucky. Hit the goalpost almost. That would have been a nice 1R win, but stopped out. So back to the drawing board, Steve. For that, let's take a look at where we're going to go for. Now, as I'm saying, the one that really sort of like concerns me is the Nasdaq. So everything else looks quite hunky dory, but the Nasdaq is the one that faces the most resistance. So let's take a look at that. And you know me, I'm the big bad bear. I quite like selling into these. Let's try and have a look at this channel, see where this channel's really sort of given us a little bit more confidence around about that level. So we are trading at the top of that channel, and yeah, I'm happy to take a look at this on a shorter term basis. Preempting, you know, if you're waiting or trading normally, you'd wait to see a reversal in this move, just like we saw back here. We saw the rally up, saw the reversal. That's the time to sell it, and then the risk reward on that is pretty decent. You've seen a bearish outside candle is a great candle to watch. So I'm jumping in early because that's the name of the game for this this bit of fun we have in the show, and I'm going to sell it. We can have the stop at 11,580. So, well, let's round it up a little bit. 660 tick stop, and nice little 4-to-1 risk reward. I don't mind that, Nasdaq. Obviously, as I say, I'd rather wait for that turnaround in the market, but we haven't got that luxury. I'll put the stop just around the previous swing high. Could do with being a bit higher, but this is just a bit of fun, as we say. So I'm going to post that up. I'm selling Nasdaq, NAS 100, US 100 at 11,520, targeting a move to 11,280, and the stop 11,580. That stop feels just too tight, but I'm going to go for it anyway. Nice risk reward, 4-to-1 risk reward. So let's take a look at what we've got in store today from a data perspective. We've got the US ISM manufacturing index at 2 o'clock, with the US job opening data at 2 o'clock also. November the 2nd, tomorrow, Federal Reserve policy decision, Bank of England on Thursday, and non-farm Friday. November the 4th, US employment report, Canadian employment report on the Saturday, on the weekend. Okay, that's all we've got time for today. Thanks for joining me. Hope it's been interesting, hope it's been helpful, and look forward to catching up again tomorrow.